What's going on, everybody? Welcome here to the session. My name's Rodrigo. We're going to be starting here in about 5 minutes with Matt Maley, Chief Market Strategist at Miller Tabak, 40 years of experience in Wall Street. Big shout out here. We have Conrad and Charles in the house. B-Rad, that's Brad. What's up, man? Wayne, Sean, Teresa, Todd. All right, folks. Patrick, I see you there. Paige. Gamal, Zachary. All right, folks. We're going to start in about like 5-6 minutes here. Matt Maley was just getting off a meeting from what I understand, but he's going to be here with us. We're going to talk about markets. Make sure you're here. 5 minutes. We're going to get this thing started, folks. All right, everybody, welcome here to the session. My name's Rodrigo. We're going to be going over a lot of trade ideas, education setups, a lot of things in the markets. And we're going to be doing it with Matt Maley, Chief Market Strategist, 40 years in Wall Street, as a trader and as an analyst. And there's a lot of information that we're going to go over. So make sure you pay attention. We're going to be going over trade ideas from the chat at the end, but feel free to go ahead and ask questions as we go. And we're going to get this thing started. I think we do have Matt in the house. Let's go ahead and bring him on. Big shout out, Matt Maley.
There we go.
All right, I think we have Matt there in the back.
There we go. You see me there?
All right, what's going on, Matt?
Hi, can you see me and hear me okay? Mine says you can see me, so I don't know.
Yeah. Okay. Sorry. Yeah, I had a little audio issue there, but so I know that you just got off the chat room, and that's something you're doing Monday to Friday with the folks. Can just tell us a little bit what happened today in the chat room? What's been going on there? I know that you cover the markets. Right before we do get into that, though, Matt, if for those that are watching for the first time, if you can give us a brief introduction of your background, 40 years in Wall Street, everything you've done, so that the folks get a sense where we're coming from with this.
Sure. Yeah. Well, I've been, as you mentioned, I've been on Wall Street for about almost 40 years. It'll be 40 years in November, so we're getting very close to that anniversary. And the thing about me is that as a strategist, I have a much different background than the vast majority of other strategists on Wall Street. I was a trader for 25 years. I spent 15 years at Solomon Brothers, which was the biggest and most important trading desk on Wall Street in the 70s, 80s, and 90s. I was not there in the 70s. I was there for 15 years, starting in the relatively early 80s, and then spent almost 10 years at Merrill Lynch, which was the biggest trading desk, and certainly one of the most important ones as well. And when I did that, I worked, I covered some of the most important trading desks on the institutional side of the business on Wall Street. Whether it be, and it was all the, whether it be the biggest mutual funds, the very biggest one, Fidelity, the biggest hedge funds, the very biggest fund being BlackRock. I covered them, it's along with other banks. Insurance companies and other investment managers. When you're doing that with on a daily basis, where you're doing block trades and moving big orders, and in many cases, millions of shares a day, or most cases, millions of shares a day, you really get a good idea of what's really going on in the marketplace. Most strategists, I think, tend to be guys who are, they're former economists or former analysts, and that's good because they all have that they always say, I have a long-term outlook, and that's great. And I have a long-term outlook as well. And I've been, a strategist here for over almost 15 years now. And so you do want to look at those fundamental and those long-term issues. But the thing is, we all want to have that big bucket that we use for those long-term investments, whether it be 3 years or 5 years, or even as much as 10 or 20, 30 years out. But for those of us who want to be a little bit more active and have another bucket where we can really maximize our returns on some little bit more intermediate term and short-term trading, so the stuff that I learned over the years, which has been just incredibly important, because the thing that I always say is the market is not always right. The market is only always right eventually. I mean, we know the market wasn't right in January of this year, and I said so at the time. I was very, very bearish on the stock market and said people should raise some cash and buy some protection, and that worked out obviously very, very, very well. And the thing is, though, is that when you're looking at those, at only the things that what should happen, you miss on what is really going to happen. We go through a gazillion times in the past where the market was dead wrong in January of 2020, and obviously with the pandemic coming, and the market was dead wrong in 2009 when it became ridiculously oversold. Same thing in 2002 and 2003 after the tech bubble burst. So whether either side, these these types of situations come up at very odd times. And that's where you really make the money. So many people on Wall Street are trying to make that 70% in the middle. And that's good. Don't get me wrong. You can do very well by doing that. But if you can get those, those, I mean, it's like you gain the 70% in the middle. I mean, back in October 2020, I was pounding the table saying, you've got to buy the energy stocks. And everybody was telling me, oh, the fundamentals say, no, it's a dying industry. Fossil fuels, forget it. Well, sure enough, a year later, the group, the energy stocks were up I was up over 100%, close to 120%. Other people were patting themselves on the back because they had turned bullish in January of 2021 and were up 50%. They missed half the move. So this is what I try to focus on, how I've been successful in this process.
Yeah, the chat room has been amazing. And I know that we started this over about a year ago, maybe now, and the portfolio is up very well for the chat room there since it started. So Matt, why don't you go ahead and just share your screen? And very interesting that you bring up the energy because it looks like, that's always seems to be like a hot sector going on. Interested in getting your take overall in that, after we go over this, because I do think that right now you're going to show the audience here basically some of the trades, like how you take advantage of what you see in the markets, right?
Right. Good. Yeah, we'll definitely do that here. Let me takes just 2 seconds. Oops, I apologize. I already had it up. Oh, okay, there we go. Sorry about that. Okay, yeah, let me just look and we'll just talk about some of the trades we've done recently. And don't worry, I'll enlarge in this and blow this up for you so you can see it much better. This happened to be a trade we did in the advanced micro device calls back at the beginning of the summer. We've done a lot more of those much more recently. Let me blow this. And so let me get to more. Oh, we are there. Okay, let me just see here. Great. Bang. And there we go. Okay. Good. Okay, hold on 1 second. Okay, no wonder I'm at the wrong spot. There we go. Okay. Oh gosh. Okay, here we go. So anyway, we've had quite a few calls here on the marketplace. I'll just start back. I mentioned those early June, the nice ones we've called here. I'm going to go back and just see the number of ones we've seen just since that one I mentioned. We had. Oops, sorry about that. Let me blow this up so you can see a little bit better. But what we come in and we look at I try to look at a couple of different things. In this situation, I'm going to save that one for a second. But the AMD calls is what we have been talking about for a while. And what had happened is that the stock had gotten knocked down significantly in May. Remember that big sell-off we had? Well, the first 3 months of the year. But I saw that the stock, using just technical analysis, I saw the stock was getting oversold on a short-term basis. So after the stock had gapped down on June 1st, I came in and said, okay, we got to take advantage of these advanced micro devices calls. And we came in, we bought the AMD June 3rd, $105 calls. And that's what we do when these things. I don't just say, hey, I like AMD calls here. You're on your own. We try to give very specific calls. And this one was, again, we gave the advanced micro devices. In other words, the stock involved, the expiration date, June 3rd, the strike price, and of course, whether it's a put or a call, in this case, a call. And we bought these earlier in the week on June 1st. And you can see how the stock even got more oversold. I wish I had doubled down on the bet down here, but you can see the next day, sure enough, the oversold condition came to fruition. Stock rallied strongly. We made 146% in just a single day. I mean, it stayed a day and a half. We didn't get the exact top, but when you make 146% in a very short time frame, it's the kind of things that we like to work on. Now, what we did came on at the same time. We went in and we bought, just a short time thereafter, we saw that this big bounce that took place in the marketplace. We saw that the market was getting overdone to the upside. And and people were starting to turn a little too bullish for my liking. And as I know, you ought to say, wait a minute, everybody was really bearish, but not in earlier June, It wasn't until a little bit further in that in that month. And so we came in and we bought the SQQQ June 10th, $52 call options. What the heck is SQQQ? That's the inverse, the three times inverse ETF for the QQQ, the NASDAQ 100, all those tech stocks. And one of the things before I go on here, I just want to say that one of the great things that we have that enable us to have had the success where we're up several 100% this year is that we have the tools where we can take advantage of moves in both directions. I mean, the old days it was just you could only buy stocks, and even then you could only make even when you bought options, if you were going to buy them long-term options. I'm sorry, when you're going to buy options, you had to go out several months. Now every stock or all the big cap stocks all have weekly options, so you don't have to pay that time value that goes out to buying something. I mean, if you want to buy something today, I mean, you have to go out until the September. If you were buying it today, back then you'd have to buy. You want to buy something on the QQQ or the S&P 500, you'd have to go out to the September expiration. 4 weeks from now. Now you could just go out a couple of days and buy those. Because they expire every Friday. Whether it be Apple Computer, Microsoft, any of those big cap names. But also, I said on the index options, they actually expire 3 times a week. Monday, Wednesday, and Friday. So you can make really short-term trades. If you're really sure about something on a short-term basis, again, you don't have to pay that big time value in either direction. The old days, you could only buy, you didn't have the opportunity, you only had the opportunity to buy long-dated puts or calls. But other than that, It was really only on the index. Now you have them on all these different strategies. But I said, going back to this SQQQ,
Matt, really quick here, quick question here from one of the folks on the chat, asking what is the schedule for the live trading room with you?
Yeah, we start up. Well, I usually get in, depending on the day, but it's usually every day about 9 o'clock, and we last till 4:35. I mean, the market's open from 9:30 until 4, of course. Now, and when there's times when, especially if there's a big number out at 8:30 in the morning, or if there's a big move in the overnight futures, I'll get on much earlier than that. But that's usually when we get started, and we basically go throughout the day. We have a scrolling chat room going all day long, and where I'm making my comments, showing some picks. People are asking questions. People are making their own comments and highlighting their own picks. I mean, I was going to say, I'll show this in a second, but one of the best picks we had this year was one that I didn't participate in. It was one people asked me about. I said, hey, that's a great one, but I'm going to hold off. I wish I hadn't, and I'll show you that in a minute. But the point is, we do that on one page. Then we have a separate page, and we call it Matt's important comments. And in that one, I make my picks so that you don't have to try to scroll up and down through dozens and dozens of posts to figure out what I'm suggesting that you should buy or sell. And you just go to that thing, and there's usually just a couple of posts each day, and you can say, hey, this is what he's bought today. This is what he sold today. And you can say, oh, geez, I've been away for 2 hours. He bought this 2 hours ago. Is it still good? You come into the chat. Hey, Matt, I saw you see you bought that 11:15 today. It's now 1 o'clock. Is it still a good play? No, it's already had a big move, or yeah, it's had a move, but I still think it has a lot more to go. Or, actually it's not working at all. We've already gotten out of it, but that type of thing. But usually it's always whatever I'm doing, it's in that. And I also put some other, when there's interesting points that aren't necessarily exact trades, but I try to keep those things to a minimum, so that you don't have to sift through all sorts of different posts to figure out what buys and sells we're trying to accomplish.
We have a quick question before we continue here with some of these amazing trades. Prasad, quick question there from the chat. Do you prefer in the money or out of the money?
I tend to go out of the money, because especially in this market today, you get with the high amount of volatility that's in the market, you just get more bang for your buck for those out of the money calls and out of the money options, calls or puts. And that's, again, the great thing is that right now we have the ability that investors didn't have for so many years. So I try to go out of the money. The further out of the money you go, the more money you can make. Theoretically, I mean, it depends on it's not for every single asset, but that's usually the case. But I don't go too far. I don't go crazy. I tend to focus on ones that trade at about $1. I just think for a lot of individual investors, that's kind of a good place to go, because I want to be able, people to be able to buy more than one of them. Because if you buy a one option, you've only got one opportunity to sell it. And when you buy 10, or maybe in some cases a lot more, you can sell half of them. If the option doubles, you can sell half, and you've already covered your costs. The rest is gravy. So I like to try to do that. And again, when you have the kind of volatility we're seeing right now, you get a bigger bang for your buck when you make those out of the money plays.
Yeah, I think this strategy that you use, Matt, is really good. Especially, I mean, I remember since I started here. I've always been following your picks and all that stuff. And, you're on CNBC and Bloomberg, but, the picks, I like that you also do provide picks for people that maybe want to buy stocks long term and all that stuff. There's also a lot of education that you provide, but more importantly, I think it's the Tuesday session, right? You have a member session every Tuesday, correct? From like, I think it's 11:30, right? Till like 12:30.
Right. Yeah. I'm just trying to figure out what the heck happened to my screen, but maybe I can pull it back. Oh, there it is. Okay, good. Yes. So every Tuesday, and we did it today, and we started off doing it for about 15, 20 minutes. We have a Zoom call, much like this call. And you'll see, I'll show you my live Bloomberg thing. These are some obviously ones that I've taken a picture of a moment in time, but we'll look at the live Bloomberg feed, and I'll have that up, and that 15, 20-minute calls is morphed into an hour-long call, and we try to make it both educational and two-way. I mean, I start off by just talking about usually about the broad situation going on in the marketplace. We talk about, and people ask, hey, I remember there's one situation where people were confusing what a head and shoulders pattern looked like. And so I spent a few minutes at the beginning of one call just to talk about, that you needed, you couldn't just have this, you needed the armpits of a head and shoulders pattern to drop fall enough to make it a real head and shoulders pattern. But we talk about those things. We talk about, what involves a symmetrical triangle, again, other technical analysis issues. And we talk about, again, we want it to be as educational as possible so people can make their own decisions or try out and say, hey, Matt, you've been talking about the MACD chart in such and such a thing. It looks like it's moving in the other direction. What do you think? You can ask more intelligent questions and learn. That's the whole idea. So we do a lot of educational aspects of it. Then I'll talk about, again, like I said, talk about the broad market macro situation in the marketplace. Then we'll dive into maybe some groups and then individual stocks. And right. Of course, any of the recent picks we've made, and talk about update them and tell you how. Hey, I'm gonna let this one ride for a while. This one we're getting close. Or another thing too, is we talk about is potential situations where, hey, this isn't quite close enough, but keep an eye on this. If this happens in the next day or so, I'm going to jump on the calls of this, or I'm going to jump on the puts on that, and then we also talk about, people will talk about, say, hey, I've owned this stock for 2 years. It's this and that. It's got a nice profit. What do you think I should do? And we talk about that as well. So it's a broad picture, broad scope, but we try to make it specific to what's going on at the time. But we also want to make it educational so people can learn why I'm doing what I'm doing and get a little bit of my 40 years experience a little bit more quickly than you do through trial and error.
And the cool thing here as well is that currently, right, you're as a chief market strategist there at Miller Tabak, you're providing institutional research to institutions, right, and your analysis on the markets. And I think it's just great that retail traders are able to access, right, your bank of knowledge, right, as far as like because you look at the global markets, you don't just look at US equities, right? You look at what's happening in the world. And like, I know that, for example, the biggest trade, for everybody that doesn't know, Matt Maley has the record for the highest percentage trade alert at Benzinga, and it was with FXI, a Chinese ETF. But even before that, he had the record, and it was shorting a meme stock. So these are just out of the box trades that you wouldn't imagine Matt doing, but he's looking out there at the markets with all of the other members there in the chat room. So it's a little bit unique, I'll say there. Yeah.
Yeah, I mean, here's the one with this happened last year with Viacom, was one of the meme stocks. They've since split off to Paramount, et cetera. But you can see how this stock, this is where I used technical analysis along with fundamental analysis and a little bit of common sense to figure out what was going on. I mean, this is an RSI chart. For those who are not familiar with it, relative strength index. Whenever stock gets, when stock gets above 70, and it's a mathematical formula, I won't bore you with it, but it gets above 70, it tends to be overbought. That's why it's a red line. They give you the red line, stop buying. And when it gets below 30, it says go ahead, buy. It's getting oversold. And you can see all these different times when it got above 70, it always was followed by sell-offs. But then the meme stock craze came along in March of 2021. Look at that. That not only above 70, it got to the mid 90s. You almost never see that at all. I came in, we went out and bought the Viacom puts. The next day, the stock dropped 27%, and we made 2,500% on the first half, where we sold half, 5,000% on the second half. Other people held on to the position for another couple of days and made as much as 10,000%. I can't take credit for that much, because I once we got up 5,000%, I said, okay, I'm not going to be greedy. Let's move on. Other people did get greedy and it worked for them. And again, when you sell a portion, when you're up that much, you can sell a portion, guarantee a nice profit, and let the rest of it ride. So again, that's another thing we try to do with the educational part, is just talk about risk management and when to get out, take the loss and run, when to get out of a stock. When to take some of the profits. And again, sometimes you only buy one and you get the one. Okay, I bought one option, I'm getting out of it. And that's fine. There's nothing wrong with that. Too many people, oh, geez, I sold it too early. Don't worry about that. Nobody ever lost money taking profits. But this was the Viacom trade. And just so I'll show you the other one, which was with the FXI. Whoops. Okay, let me just get over to it, make it easy here. I think it was, I just want to make sure I have it placed at the right place. Yeah, here we go. So what happened was the Chinese market, and again, this just give you an idea of what, here we are, I'm sorry. Okay, let's pull it up for you. There we go. Now, the Chinese market, had been getting clobbered throughout 2021 with all these people trying to say that that the market is going to be, where the Chinese really started cracking down on a lot of their different industries. Every single month, it was a new one. They started off with tech, with Alibaba and Jack Ma, and then they just went right through gaming, education. When I say gaming, I'm talking about video gaming, and then they did it for gaming, for casino type gaming. And it was one after another, and the market just got absolutely slammed. But then in here, the US started talking about delisting some of these stocks, and they just fell out of bed. And again, looking at that RSI, it was the most oversold reading ever. That the last week's chart obviously is the snapshot I took a year ago. It's not over a year ago. But see, the most oversold ever. So I said, we got to buy these things. So we buy the calls. And sure enough, the next day, this huge rally, 27%. Can you imagine the S&P rallying 27% in one day? Well, that's what happened. Number one, I knew it was oversold. Number two, from experience, I knew that the Chinese was no way they're going to let their stock market crash. They have the wherewithal and the ability to make sure that doesn't happen. And so they came in, and I knew they would buy it, and then the pop wouldn't just last a day or half a day. It would stay, because they would just stand there and buy it, and they'd probably shoot people in China who kept selling. So we came in and gave, again, the exact option, the FXI, March 18th, $30 call. Now, this is the one from this year. I talked about Viacom was in March of last year. We hadn't started the chat room then, but I did do it on one of my other letters, the tier 3 letter. So just so you know that what was going on when we say, wait a minute, I thought you've only been doing this chat room for a year. We have been. So that was from another iteration of the market letters we do at Benzinga. But this one, again, we did in the chat room, the FXI, March 18th, the expiration day, exact call option, boom. The next day it opened up 1,000%. I did not take profit because I knew the Chinese government would keep on buying. Then it got up 3,000%, and I said, okay, I can't be greedy here. We've got to sell half of it. So we sold half at 2,948%, almost 3,000%. Then at the very end of the day, it was up almost 8,000%. And I said, I do think the government's going to keep on buying, but I can't get greedy. So we sold them. Now, we sold the balance of them. Some people did hold on to them. One person saying they made as much as 14,000%. Again, I can't take credit for that part of it, but I can't take credit for the 8,000 and the 3,000% moves. So these, again, we look not just at the local stuff on the stock market. We look at the bond market. We've made money in the TLT. We made money in the UUP, the dollar ETF, which we might be doing again very soon because the dollar is getting very overbought. We'll do it in the high yield market. We've made some really big wins, and the HYG, the options, the HYG high yield ETF. And again, in individual groups, we'll buy them in the on the SMH, the semiconductor ETF, or the XLE, where we've made several trades, and I'll show you some of them, where we've made several 100% on just a few days in the XLE, which is the energy stock ETF, which is done very, very well for us. And then, of course, individual stocks. I showed you advanced micro devices. Oh, Amazon was the one I wanted to show you too, where a person in the chat room came out and said they wanted to make a bet on the split on Amazon. I said, geez, that looks like a real good play. I'm not going to play it right now, but I do like the play. Several people in the chat room did use it, made 2,500% on the trade. I missed out, you know. And the thing is, they asked me, and I told them it's great, and I didn't pull the trigger. What an idiot! So, but that's to give you an idea that I'm not the only one giving, providing ideas. People are not only providing their own ideas, but they're also asking, saying, "Hey, does anybody knows this?" And then I'll make a comment on it, or other people make a comment on it, and it's a great community for a lot of different ideas, not just one person, because nobody has all the answers by a long shot. Oh, by the way, just so you know, for those if there might be in Asia, I'll be on CNBC tonight at 9:45 Eastern time. But I'm going to be on Bloomberg Radio bright and early, 5:45 in the morning on Friday. And I just wanted to let you know, I'll also be on TD Ameritrade tomorrow, TD Ameritrade Network at 11:30, and Bloomberg TV next Tuesday, the 29th. I'll be on just after 3 o'clock. So you can see that my institutional presence has given me these the opportunity to get on TV. I've been on hundreds of times. I'm on pretty much most weeks. I'm on one channel or another. That doesn't mean I know what I'm talking about, but they obviously again, we get calls. I got another call from Carl Icahn last week. Too bad I was out with my sons for a little vacation, but I've talked to him in the past. They've seen me on Bloomberg and said, I like what you think. I like what you're saying. I wonder, I'd like to pick your brain a little bit. So that's the truth. I'm not making that stuff up. I would never make up something like that. Anyway, so these are the types of things that we're able to do. The one thing I would just want to go a little bit now is just talk about what the situation is in the marketplace today, because we are, I think, whoops, there we go. Sorry, I just want to pull up my live Bloomberg. So you guys can pull and see what I'm looking at. Okay, now one of the things that is, I've been saying all summer long that I believe that this rally was a bear market rally. Now, a couple of people came out and said, yeah, but once it reaches a 50% retracement, that's it. You don't have to worry. It means it's a new bull market. I have no idea where these people how they can possibly say that. That's just wrong. I mean, it's not only is it wrong, it's very dangerous, because 50% is the level that the market retraced in 2001 and 2008, just before they rolled over and fell even more out of bed. And I'll just show you here. I mean, here's the index. I'll just do the one. I'll just tell you. I don't want to get too caught up in this. But back in when the tech bubble burst, actually I'm going to do it. Well, I'll do them both. 2003. Okay. Here we go. The stock market did sell off. Here we go. Bang, bang. Look at that. Okay. It sold off to here. Whoops. I'm looking at the wrong one. Here we go. Sorry. Come on. Okay. Why is this thing disappearing? All right. I'm sorry, I'll just take 2 seconds here. Come on. 1999, 2003. Okay. Now, you can see here, there we go. Okay, you can see how the market sold off hard. And let me zoom in so you can see it even better. See how the market sold off hard. It bounced, right, in March. Bounced for a couple of months, just like it did this summer. Got exactly, see that 50%? See that little blue thing there? It says 50%. I hope you can see that. Got right to 50%. And didn't keep going higher like all these people are trying to claim. It rolled out back over in a serious way, in a very serious way, and made a much more serious lower low. The same thing, exact same thing happened in 2000 and during the great financial crisis, and where it actually got a little bit higher than a 50% retracement. That's what we got this time, a little bit more than a 50% retracement. And sure, and now it's starting to roll over again. Oops. So, I mean, why these people try, it just, there's one thing you can say, hey, I have an opinion on this, and we can argue whether the opinion is accurate or not. But when you say something as a fact, and it's either yes or no, it's a black and white issue. I don't know how they get away with saying it. I just don't. It's very, very strange. But here we go again. I'll zoom in on it again so you can see it better. Let's see how this thing, again, see that 50%? I hope you can see that in there. It got right up, it got a little above that 50% line and then fell out of bed. And that's exactly what we've seen this time. However, the more important thing we have to worry about is that, and a couple of different issues. Number one, let's just see here. Number one is that, one of the things that I think not enough people really come to understand, especially somebody like, the SARC people, I'm sorry, the ARC innovation people, Kathy Woods. But I mean, it's great that, they don't understand that there was a huge amount of the rally that took place in 2020 off the 2020 lows was simply driven by the massive amounts of excess liquidity that was provided by not just the Fed, but the global central banks. And so, if the market came in, everybody's like saying, "Oh, it's going to be great. It's going to be great." The market went to the moon, but they thought that it was because of all this innovation, ARC Innovation Fund. It's like, no, all this liquidity came flushing into the system. That much, then once they saved the economy, in other words, the economy reopened and started humming along again in the fall of last year, they didn't need the liquidity anymore. And especially as we got into this year, they didn't need the liquidity anymore. But the Fed kept pumping it anyway. So the banks didn't have anywhere to loan it. What did they do? They invested the money. That's what they do. And that's where the market got pushed up to valuations levels that were so extreme. People try to claim that it's all because of low interest rates. Well, if low interest rates were the reason why valuations got so high, why didn't that happen in Japan over the last 30 years when their 0% interest rates did not take valuations higher? Because they weren't flooding the system with liquidity. They were trying to use the low interest rates strategy, and they've been able to shuffle their way out of it, but it's taken decades. The same thing happened in the 1950s here. Interest rates were at ridiculously low levels, but that did not push valuations up to new all-time highs. What pushed them up, just like they did in the late 1990s, was massive amounts of liquidity being added to the system. It had to go somewhere. What am I talking about in the 1990s? In the 1990s, it wasn't QE. It was this money that was put in behind the scenes because everybody was afraid of Y2K. If you're not familiar with that, you go look it up. But it was just an issue where we were seriously worried about major bank runs because in 2000, all the computers around the world were going to say, we're going to register 1900 instead of 2000. And that would have meant that everybody's bank accounts would have gone to zero, except for maybe a few people who were over 100 years old. But so they provided this massive liquidity. And sure enough, 2 months after the 2000 and everything was hunky-dory, they pulled the liquidity and the tech bubble burst and the market crashed. Okay, and that's what's happening now. They want to do it in a more gradual fashion, and that's why we got a big initial 20% decline. We have more decline to come because.
Hey Matt, really quick here. We're getting a lot of emails and questions about the chat room. If we could just go over a couple of these questions and then we can get back here into the session. Again, folks, thanks a lot for sending these in. And all right, so good question here, Phil. What is the chat room schedule with Matt? I think we went over that earlier. It's Monday to Friday, 9 to 5, and the session on Tuesdays, that's 11:30 to 12:30, and that's recorded as well. So Joanne, next question. Does everybody that joined get a free laptop? Yes. Yes, we are giving out free laptops. Yes. Then we have Anne. Is there a money back guarantee? Yes, we do have a money back guarantee. There's a 7-day money back guarantee on this. And any questions, you can always reach out, if there's any questions and such. And the price at renewal is going to be the same as today, which is like 70% off. So that covers most of the questions there. And the last question there was if Matt provides education. I mean, yes, that's pretty much a given, right, Matt?
Absolutely. In fact, we're going to go over one of them right here, right now, I want to just talk about what's going on in the marketplace at this minute. We're going to talk a little bit about MACD charts and why they're important, and I think incredibly important right now, and why I'm worried this market's going to is right at the beginning of another leg lower. Yeah, education is a vital part of what we try to do. And no, as we say in the chat room, no question. There's no such thing as a dumb question. Don't be afraid ever to ask anything you'd like, and we'll be there to help out. But to just going back to what we were talking about, I'm concerned about what's going on with the change in liquidity. The Fed, they've been tight. Are they going to, even if they are going to slow the level of their at some point? I mean, it's probably in September, raise their. I'm sorry, they did. They did this past time ago 50 basis points, and it's going to drop to 25 basis points at some point. However, they have not even hardly at all started shrinking their balance sheet. That's going to start, it's scheduled to go from 37 billion a month to 90 billion a month in September. But the thing is, they haven't even shrunk it by 37 billion for the last 3 months like they're supposed to. So they've got some catching up to do. And that's going to take liquidity out of the system. Now, what I like, reason why I'm thinking that it's happening now, number one, we're about to go into September and that shrinking should continue. But this is the MACD chart. And what a MACD chart, a lot of you, I'm sure, have heard about the golden crosses or death crosses. A golden cross is when the 50-day moving average rises and breaks above a rising 200-day moving average. And it's not a sign of a bottom. It usually comes, it always comes after a bottom, and it shows that momentum has changed. We have a big change of momentum. The other side is what's called a death cross, when you see the 50-day moving average cross below a falling 200-day moving average. That's a death cross. And again, that tells you that the trend has changed to the downside in this case. And the MACD charts are shorter term averages. They use the 12 and 26-day exponential moving averages. But you can see that, and so what happens is when the shorter term, the 12-day drops below the 26-day, that's a negative cross. And that shows that the momentum is shifted. Now, of course, on the positive side, it's the other direction. And you can see how well the MACD chart has worked this year. And I'll just show you right now, we're seeing in the NDX, which is the NASDAQ 100, again, those high-tech names, that's sometimes you get a little bit of a false move like we saw in here. Okay, false move. But when you get a meaningful break like we've seen in the NDX, look what happened here. Big sell-off there. Look what happened here. Huge sell-off there. Look what happened here when we had a negative cross. Big sell-off, et cetera, et cetera. For the last year, this has been a very compelling development. And that's what we're seeing right now. And that has got me very worried that we're ready for another big leg lower. Personally, I think we retest the lows. Here, this one is in the S&P 500. Not quite as much of a negative cross, but it's still an important one. So in other words, I probably want to see another, a little bit more downside follow through to make this a more compelling negative cross. But we can see how the S&P, let me get rid of some of these lines. That purple line you see on the screen is the 200-day moving average. And as we all know, I'm sure we all have heard, it got right up to that line, failed at that line. Now we're seeing a negative cross. If this becomes more pronounced, this market's going to get hit pretty hard. Now we'll see what happens Friday. We have and it won't come in a straight line, of course. We'll see what happens Friday. But that's one of the things we'll be looking at what Chairman Powell has to say. The Kansas City Fed's symposium in Jackson Hole starts on Thursday, but it goes through the weekend. But Powell speaks on Friday. That could have a big impact on the market in one way or the other. I'm kind of thinking if the market sells off more, it could actually bounce off that. But we'll just have to see what he says and how the market reacts. But right now, we're setting up for more downside movement, whether it comes this week with the Jackson Hole meeting or later as we move into September after Labor Day. I'm not exactly sure, but I do feel it's going to head lower. And again, this is the evidence I'm looking at. Again, it's not just these indexes. I mentioned the semiconductor index. That is one of the most important leadership groups. It's probably the most important leadership group in the marketplace. Okay, look at that again. I'm going to get rid of the moving averages so it's not such a busy chart. But see that is a confirmed negative MACD cross. And again, look what happened when these negative. Now, when they get positive crosses, it's very bullish. So when it comes back down, we'll have another buying opportunity. But this negative cross there, see what happened? Okay. Negative cross here. Look what happened to the market. This thing is seeing a negative cross. So what I'm looking at right now, and again, we were talking about it in the chat room today, in our call, in our Zoom call today at 11:30. All we need, see how that's not only just the recent low, but it's the lows from mid-August. It'll give it a key lower low. It's already below its trend line from those July lows. And remember, everything else in the market stopped going down and bottomed in June. The fact that the semis kept going in July tells me that we're not probably, that this is not the ultimate bottom. And so now we're starting to roll over. And it looks to me like we're going to head over soon. Again, so what about in another one? Is the high yield market. The high yield market is a very, very important market for the stock market. It tends to be a very important leading indicator, if not a coincident indicator. It's never a laggard group, though. Look at the big negative cross here. A big negative cross here. Look what happened the last time it saw a negative cross. It went straight down. Negative cross here, the group went down for 2 months. This is very dangerous. And we could go on. I mean, Apple Computers, great company. Nobody's going to say, but something doesn't always mean it's a great stock. Guess what? Apple Computer, negative cross. It's only a mild one, so we'll probably see a little bit more. But again, look what happened to the stock here when it saw a negative cross. Look what happened here when it saw a negative cross. And I go Microsoft. We had same thing with the Stocks Europe ETF. And I'll do one more here, and I'm going to bore you with all these MACD charts. MACD charts aren't the be all and end all, but when you have so many of them doing and making these kind of moves at the same time, especially when this particular chart has been such a good one in the last year, we pay attention. Again, this is the MACD chart in Bitcoin. You see how that's made a negative cross. And again, see the cross there, negative cross there, negative cross there. Again, always followed by a significant decline. And so I'm very worried about the stock market here. And that's why I think, so people saying, well, if the market's going down, I can't make money. You can. We have the tools. In the old days, the only people who could have weekly options and make negative bets in a kind of big way were institutions. Now we can do it. Not only do we have weekly options, not only do we have 3 times a week options in the indexes. We also have inverse ETFs. We have options on some of those inverse ETFs. We have, and we also have leveraged ETFs. This works both ways. When the market's going up, you want to buy the TQQQ. That is the leveraged. You can buy calls on that, and when the market rallies, you're going to make 3 times the money. All of these things allow us, and again, we can do it not just in that. We can do it on wheat. We made a nice return on trading wheat this year. Do I want to try to tell individual investors to go out and start buying wheat futures? And if you're sophisticated and you want to do that, great. But we bought WEAT. We didn't have to. We bought the ETF.
Hey, Matt, really quick here. Big shout out here. We have Lana here, newest member here. Welcome to the family. We got to give a big shout out there. Let's go.
Great, Lana. Great to see that you're with us. Whoops, I'm sorry, my screen froze up there for a second. But here's just an example where we made well over 100% on WEAT, which is a wheat, the commodity ETF. We came in, it became ridiculously oversold. Whoops, it became oversold here. We bought it, and we've had a couple of nice bounces there. We haven't even thought about it here, but the point is, we're making it. Well, I showed you the Chinese market. I showed you how we made money, and we made money in the TLT, which is the Treasury bond ETF, the HYG, the high yield ETF. The commodity, wheat, gold. I'm sorry, gold. We played in that and made some nice money there. But especially in these energy stocks, we've made some really nice plays. Again, I don't want to kill you with these charts to give you examples, but we have had some in the XLE that have worked out extremely well for us. We did it well. Again, I'll just go back to my thing. But we came in. Hold on one second. Let this thing go out. There we go. Okay. Let's see. Here's another great one. Just see here. Okay. Apple. Well, I'm going to go back because I want to talk about this one about Apple. I'm worried about Apple here near term. They are coming out with a product announcement in just a couple of weeks, so I want to be careful. But here's a situation where again, I used my experience. Apple Computer was getting killed here in early May. And it was like, there's no news out. I mean, I know the market's down, but there's no news on the stock. The stock's down 10%. Then I realized what was going on from my experience, because that was when Bitcoin was getting, or Bitcoin and other cryptocurrencies were crashing. And I knew that the people were getting margin calls, and people did not have enough. These Bitcoin, cryptocurrencies weren't liquid enough for people to sell. They couldn't sell enough of the Bitcoin to meet their margin calls. So they had to go and find something else they could sell, something very liquid and something that they owned. They had to own it, right? Well, they didn't own General Motors. These guys are buying Bitcoin, right? So I thought Apple Computer. Sure enough, I figured that's the reason why the stock is down. People are using it as a source of cash to meet their margin calls in Bitcoin and Ethereum and these other cryptocurrencies. Well, sure enough, on the 12th of May, Bitcoin's leveled off, and yet Apple was down again. And I said, this is a great opportunity. The stock's down for all the wrong reasons. We came in late in the day. We bought the Apple May 13, $143 calls. By mid-morning, late morning the next day, we made 400%. I didn't get the exact bottom. We could have made a little bit more if we sold it, waited a little bit longer. Well, if you're going to lose sleep over making 400% and you wish you had made 450 or even 500%, you shouldn't be in this, because you'll drive yourself nuts. You make 400%, you pat yourself on the back and say, let's go, great job. And again, these are the types of things that we do in the chat room, using my experience and such. But I just wanted to make sure that you knew that there are a lot of different ways to make this money. And it's not just, it's individual stocks, ETFs, and across the board. Here was one, and I'll just, before I get in there, XLE. We've done this a couple of times. And the XLE, everybody suddenly, you remember I said I was the only guy bullish in October 2020. Then in the end of May and early June of this year, everybody said, oh my God, the oil is the only place to be. And I said, I became the contrarian again. I said, no, everybody's long it. Everybody's bullish on it. The people are the institutions overown it. We got to go in and buy the puts. So we bought the XLE. Remember, that's the ETF for the oil stocks, the June 17th. So that's the expiration date. We bought them we bought them 2 weeks in advance on the 8th of June, if you can see down there, and the $90 puts. Well, sure enough, we bought them. They did very nicely. After they had gone up, 3 days later, I sold the half of them up 560%. When it started to dip, I was like, uh-oh. And then when it came back a little bit, I sold the other half. Whoops. I sold the other half with a 400. So we averaged about 540% on the total position in 4 days. So
really quick here, Matt, and Lewis has a good question here. It looks like, so basically, is this service day or swing trading? So it's almost like it's short-term trading, right? It's not meant to be a day trade, but if it's up several 100,000% or whatever, nothing wrong with that. But also important to note, Matt, that you also help people with long-term investments that they want to put out, right? So if somebody's a little bit more passive, where they want to put a stock 5, 10, 15 years out, maybe for their kids, school, college, whatever it is, you can also help them with those kind of stocks, right? Not just
absolutely. I mean, one of the things, it was funny, we talked about today in two different ways. Number one, well, again, just to talk about this, here was kind of a swing trade. I mean, it was only 4 days, but so it was more of a swing trade. But some of them are day trading. I'm not a day trader, but we look at some. But certainly, I've certainly done some where I bought it in the morning and it was too high in the afternoon. And there's some people in the chat room that's what they do, and they are flat every night. They go out and they say, nope, that's what I've done. But for us, we look at all the opportunities. I mean, and I talk about this Verizon. Let me go back to the. Let me go back to my Bloomberg so I can show you. Oops. Okay, we talked about Verizon today. Shoot. I just blew that up. There we go. What happened to my Bloomberg? Gosh darn it, did I?
Really quick there, Matt, before you get into Verizon and all that stuff, I don't know if you touched on energy, but I mean, I know that you've been bullish on energy for a long time when everybody else was not. But how long do you think this bull cycle is going to be in place? Do you think like a couple decades, half a decade?
Well, I can't go out that long. I do think it's going to remain for a couple of years. And one of the reasons why let's see if I get this. one of the reasons why I believe that is because, well, let's just go into, oops, what happened to my, oh, there it is, I'm sorry, okay. Not really sure what happened to my Bloomberg, but I'll bring that back up in a second. It looks like I logged up, but I'm going to tell you why I think this as I'm logging back into my Bloomberg. I apologize. Let me just get I have a special little thing that I have to use to get back into it, but okay. Now, so what my thinking is on the energy sector, and it's the biggest problem that too many people are saying is that they think that they don't look at the full picture. I mean, look at what happened with the Saudis today. The Saudis have come. Actually, it was yesterday. They came out and said, we're going to pull back. I mean, they're basically saying, we're out of whack with the futures are trading and what the production, what we can produce. So if people don't understand what we can produce, we're going to produce even less. Okay, so they're going to cut back production. But even if they wanted to, they cannot. There we go. They cannot produce what the demand is seeing right now. So it's kind of ridiculous. But on top of that, we have a situation where we have the sanctions against Russia. Russia is not delivering as much oil as they had been. Now, yes, they are delivering some. That's part of the problem, is that they're not really getting squeezed. They can sell enough to India and China where they bring plenty of money, where they can still feed their people and get their army, keep their army in shape, although sometimes there's different reports on how good their army is and what kind of shape their army's in. But it's still going to be more powerful than Ukraine. This thing's going to drag on for a long time. They have the wherewithal to drag this on for a long time. And they certainly are going to drag it on into the winter months because they want to see how strong Germany is going to be. Because they know that without their natural gas, they're screwed. I mean, there are people that are going to have to turn off this is a ridiculously serious problem. Now, maybe it does leave Germany or part of Europe to give in and say, okay, we'll let you back in. But boy, the U.S. is going to pressure them not to do that, and in a major way. And so I think that so you have the supply issue. You can't. Everybody's saying we're going to get demand destruction down. That doesn't work. Yes, it has worked since the early 1980s because it has been a demand issue all those years. Every time oil got too high, it's because the economy is overheating or demand was getting out of control. And so it went way up. So what did you do? You did things to, you raised interest rates and you did things to cut back on that, cut back on demand. In other words, demand destruction, and that caused it to come right back down. But what happened in the 1970s? There was an OPEC embargo. Okay, and if those who are too young to remember that or know what that is that basically the members of OPEC in the Middle East said, we're just going to restrict. We're going to let prices shoot up. We are going to restrict the how much oil is let out. So again, it was a supply issue, not a demand one. Demand didn't matter how much demand went down. The supply wasn't there. It was it's easy, simple to supply and demand. When demand goes way down, supply just makes prices go down. But when they both when supply goes down first, demand prices stay up. That's what happened. This is why it's exactly like the 1970s. Some guy, somebody is trying to compare it. Oh, this is more like 1946. What are they talking about? 1946. That was the biggest boom in the history of the world. All of Europe was completely in rubble. I mean, they had completely rebuilt it. They're rebuilding Japan and much of the Pacific area. It was the U.S. had all the GIs coming home. The GI Bill. They all were going to college. They could get a house with 5% down. You went to a bank. You were a GI. The bank had no choice. By law, they had to give you a mortgage 5% down. That was it. Of course, nowadays that's nothing. But back then, in the years after the Depression, nobody would even think about getting a mortgage for less than 20 to 25% down. The whole housing was booming. Babies were being born. The baby boom. Comparing the inflation we had in the post-World War II era to today is ridiculous. The real comparison is 1970s, and that's because it's a supply-related issue. That's why we're having stagflation. Because the market's rallied over the last 2 months, people have forgotten about that. But I think this oil issue is going to be here for a while. Because will oil prices come back down at some point? Yes, because at some point something will happen that Russian oil will start flowing again. But remember, it was not the Fed. It was not the Fed's raising it. Everybody wants to give Volcker all that credit for saving inflation, for curing inflation, for taming inflation in the early 1980s. That's not what really did it. What really did it was that oil prices fell out of bed. Why did oil prices fall out of bed? Had nothing to do with demand destruction. It had nothing to do with Chairman Volcker. It all had to do with Iran and Iraq got into a war, and they couldn't afford the war unless they sold all their oil, sold their full capacity. So they flooded the system with oil. They went to OPEC and said, forget it. We're no longer going to stay with our limits. We're going to sell it because we want to win the war. And both of them did it. That was plenty of oil to go into the system, and oil started a 20-year decline. That's what took to save the price. So people don't understand that, and that's what we need to understand. That's why I think the next several months are going to be really exciting, not only in the oil business, but in the overall markets.
There's this guy from Ukraine. I talked to him today. He was signing up for the chat room actually. Wow. And he was telling me that his energy bill, natural gas is up like probably eightfold. So it's getting pretty crazy over there. Like it's not crazy. It's crazy here, but over there it's like crazy 10x basically.
Yeah, it's beyond crazy. I mean, it's like when we have in the United States, we have people living 64%. Now you can quibble with the number. I've see a number of 64%. Others say 62. What the hell is the difference? 64% of the people in this country live paycheck to paycheck. What happens when you're paying? Okay, great. Oil prices have come down. Gasoline prices have come down. They're still 40% higher than they were last year. Not only that, food prices are moving back up. Natural gas. And the thing is, unless this thing's solved tomorrow, which it isn't going to be, food prices are going to stay higher next year as well. Why? Because natural gas is still right near its all-time highs. And it's, or at least its highs of the last several years. And natural gas is essential in the production of fertilizer. Okay. All these guys, they bought all this fertilizer. They're going to be buying really expensive fertilizer next year too, because the natural gas prices that are now are going to be what they're going to spend on that fertilizer, unless it goes down immediately. We see natural gas prices up into the winter time. That means fertilizer prices are going to be up next year. That means food prices are going to remain high next year, because it doesn't matter. Let's say they finally solve the problem next June. That doesn't matter. It'd be too late. The planting season in the northern hemisphere will already be long over. So food prices are going to remain high. Inflation is going to stay with us. And again, it is going to come down. But peak inflation, when they talk about peak inflation, that's another thing to talk about. When they talk about peak inflation, great. But usually when we hit, that's usually a real great top for the market. I'm sorry. That's a great bottom for the market when you reach peak inflation. The problem with that argument this time around is the last time we reached peak inflation back in the 1970s, when inflation was a serious problem, back in the early 1980s and peak inflation hit, the stock market was trading at 7 times earnings. 7. Today it's trading at 19 times earnings, or I guess now it's down to 18.5 with this little dip. I mean, you talk about cheap, okay? The stock market, bear markets don't end until the market gets cheap, and it's not gotten anywhere near cheap, and certainly it's not as cheap as it was the last time we had peak inflation. So when you get peak inflation, it starts coming down gradually. When you're trading at 7 times earnings, that's really bullish. When you're still really expensive, that doesn't allow the market to go higher. Okay, it's just these people. So many people on Wall Street are paid to be bullish. That's what their job is. I did an interview one time. Somebody called me up and said, "You'd love me to go to this one of the biggest fund managers in the world." And they said, "Well, you're not really be a strategist. Your job is to make sure give people reasons to keep their money in the market if and when it goes down." What? It's like, so again, that's salesman job, but so it's a sales job. It's not a strategist job. And so, needless to say, I didn't pursue it anyway. It was a telephone interview, and they asked me to come in. I didn't go to the next round. But so that's what we got. Again, markets do go up usually, okay? And this is going to provide one of the greatest buying opportunities of all time. I just don't think it was in June the way some people do. I think that all of the mountain of evidence shows that it will come. We won't just get a retest of the June lows, we'll probably get a drop below that. But if it, but we'll be, believe me, we'll stay nimble. And if the situation does change, if the Russia situation does change and suddenly a lot of oil comes flooding in and oil prices drop like a stone and natural gas falls in a big way, we'll have to rethink it. So, when the facts change, you won't change. But right now, people are whistling past the graveyard, just like they were in December and January this year, when it was, when it was fairly evident. They kept saying, well, it's different this time. They kept saying, well, it doesn't really matter. Rates will go up, but I'm like just saying, every time the Fed tightens, the market goes down every time. Okay. And they just, came up with these fantasy excuses why it hadn't. I said, no, it's not always a bear market, but it's always a deep correction, anywhere from, close to 20%. If it's not 20%, it's close to 20%. But again, they're paid to be bullish, so they went with those little fantasies, and it didn't work. And now they're kind of doing the same thing, where they think that somehow we can knock down demand in a serious way, which that can happen. This certainly can happen. But if they knock down demand in the kind of way that will take inflation back down to 2%, what's that going to do to earnings? What's that going to do to the economy? If demand destruction, we're a consumer-driven economy. If the consumer can't spend anymore except on food and energy, fill their gas tank and put food on the table, earnings are going to do this. And it's like, you're trying to tell me the stock market is going to rally strongly? I could say, well, we could look over the valley, and that's fine. But that's what you do when the market's cheap, not when the market's expensive. Okay, and bear markets don't end until, well, first of all, they don't end until the Fed stops tightening. Number one, they don't end. The Fed doesn't stop tightening until inflation falls below the Fed's funds rate, and then three, the whole thing doesn't happen until the stock market gets down at least to 14.5 times earning, if not lower. So it's just these, the people have been, again, they've been so long with the Fed, with this Fed put, and of course, it was like, well, we all know it didn't work. They backed off of that Fed put this year, but now somehow they believe it's back again. So you really think they can just keep blowing up bubbles? We can't do that. We have 11 trillion, almost $12 trillion in corporate debt. Okay, we can't keep adding to that, because if you keep interest rates ultra low, the corporations will just keep on borrowing because at those low interest rates. And that at some point something's going to give, and when that blows up, you will have massive defaults, and that the whole they don't want to go through 2008 all over again. Okay, what they have to, they are deciding on the lesser of two evils. The lesser of two evils is a recession now, a stock market that comes down more, in my opinion, is better than letting it go and letting the bubble build back up again to a point where if it does implode, they won't be able to save the day anymore, because there's just too much debt. There's too much global, there's too much corporate debt, there's too much personal debt. Those people say, and remember how everybody was talking in June about how the consumer is such great shape? What happened to that? Okay, nobody's saying that anymore. Why? Because credit card debt is back up to a new high, revolving debt's to a new high. People are only keeping spending because they're going into charging on their credit cards. They can't do that forever, especially if rates, if food prices and energy prices stay high. I don't want to keep droning on here. Oops. I don't want to keep droning on here. I say oops because I want to plug in my computer. I don't want to run out. But we're just in it doesn't. I don't want to be fear mongering and say, oh my God, the world's coming to an end. That's what some people do. This is, buy guns and butter. What I'm saying is that what's going on right now is the normal process. If you think the Fed didn't know in advance that their change in policy was going to cause the stock market to go down, you're out of your mind. And then people say the call for the soft landing, do you really think they're looking for a soft landing? Of course, they'd love to have that. And of course, they say that. But what do you expect to do? Say, no, we're going to cause a recession. Well, then we'll have, if they said that would happen all at once, and then you start talking crisis again. If things happen more gradually, like most bear markets do, and they take a year or two to play out, not just 6 months, then the thing kind of it can handle itself. So they are following this, but they are going to. I strongly believe, no matter what he says this week, they have to shrink the balance sheet. They can't just keep growing it. They can't just have the liquidity flow into the marketplace forever. At some point, something will break, and it will cause implosion of the system because the corporate debts will default, et cetera. I keep thinking like I'm rambling in a way that will means that I'm calling for the end of the world, and I'm not. I just think that we're going to see something closer to 30% than 20% in the S&P at the bottom from the all-time high, not from current levels, and that will actually be healthy. It will actually be a good thing over the long term. It will get the stock market to trade back on its actual underlying fundamentals, not just the steroids. They were on steroids. This is the same thing. They had steroids, and whenever you come off steroids, you can still be. If you're a big, strong guy and you're lifting weights and you're really strong, that's great. You go on steroids, you're going to be even stronger. When you come off the steroids, you're going to have to, first of all, you're going to have to go through the withdrawal. That's tough on your body. But once you're off of it, you can still be strong, okay? But you're never going to be as strong as you were. And that's okay, because the stock market shouldn't be trading at 20 or 20 times earnings. It should be trading at 15, 16, 17 times earnings. And people can make a lot of money when stocks come back down. And then now you can be a stock picker again, instead of just saying, okay, I'll buy a meme stock today. I'll buy AMC or GME or one of these, ridiculous stocks that go up, a couple 100% in a couple of days. I mean, we made a fortune buying BBBY puts last week. I came in, I said, this stock is ridiculous. And some people in the chat room said, oh, watch it, the shortages is really high. And I said, this stock's going to be down 50% one day. And well, it took 3 days, but it was down over the 50%. And we know what happened there. I just been doing this too long to know that all you have to do is look, see, they don't stay up very long. They stay up, and then as soon as they roll over, this is where I call it, right in here. People were buying puts in the chat room, and we made lots of money on those. So sometimes people don't like, I just try to be honest and tell people this is what's really going on, what the Fed is doing. Whether they're doing it the right way or the wrong way, people want to blame the Fed. I do blame the Fed for leaving that liquidity on too long. But now that they've done it, they can't. And people say, well, they can just pivot. They're going to pivot in September. Oh, they're going to pivot before the election start at 18 times earnings and take the market up to 24, 25 times earnings. Because I tell you, in 2000, one of the reasons why the recession was so mild, I mean, the stock market got hit hard, but we barely had a recession. And the reason why, because the economy was still doing really, really well. And there was a lot less debt. Today, there's many multiples of that debt, both individual, especially on the corporate side, and of course, sovereign debt, that it comes to the point where you just can't service that debt, even if they keep interest rates somewhat low. In fact, I would argue that they're going to keep inflation high, relatively high, not 9% or whatever, but they're going to keep it well above 2%, because that's the only way we can get out of this debt bubble, the corporate debt bubble we're in. We have to be able to inflate our way out. So that's not going to be great for the stock market for a while, but it is going to create some unbelievable opportunities on both sides. And when we do get the low, and maybe the low comes, Mike Wilson on Morgan Stanley said the stock, you see a bottom sometime in the fourth quarter. I think it goes down to 2023, but it is possible. That doesn't mean everything's going to be great next year, but it does. I mean, people forget that the Great Depression, and during the Great Depression, the market bottomed in 1932. and yet the depression lasted 10 years. But if you were buying stock in 1932, and you did really, really well throughout the 30s, because you made, that's my point. I want to be in that situation where the market really gets hit hard, that we've raised some cash in front of it, so we have some cash on hand, number one, and number two, we've made some money on the way down, so we can really take advantage of that when, I don't think it'll take 7 years or 8 years for the market to rally back like it did during the Great Depression. And I'm not looking for that kind of a decline. But I am looking for a more serious one that we've seen so far. My big thing is that so many people are going to be selling at the exact time they should be buying. I mean, even at the lows into June in the chat room, I was saying this market's getting oversold. We ought to buy. I must have, and I didn't think it would rally as much as it did. I'm not going to try to claim that I rode it all the way to the top. I definitely did not. In fact, we lost some money calling that saying the top was in, but I do think it is now. It could have gone on a little bit longer, sure, another week or two. I don't think it's much longer than that. But again, like I showed you, those MACD charts are part of the reason why I'm very concerned here. Again, we're going into the end of August. It's funny. It's usually a very boring time for the stock market, but obviously it's not going to be the case this year with the Jackson Hole meeting coming up, especially if this market rolls over like I think it is going.
Hey, Matt, really quick, big shout out. Steve Chu 97. You know the drill, guys. Welcome. Welcome to the family, Steve. Let's go.
Great. Great to have you. Welcome aboard. And let me just pull this here. Again, I just want to pull that thing back up. That MACD, oops, that's the wrong one. That's SPX stock. S&P 500, I should have done index. And there we go. See that thing? Just look at, I mean, let me get rid of the volume chart. Let me get rid of the volume, get rid of the other two moving averages. You see the purple line, look at that. Do you really want to be buying? Look what happened there the last time. Got right to its 200-day moving average, is starting to roll over. Look what happened there. Whoop. Again, it kind of down here, even that, but look at each one of these times. You saw a negative cross. Even this one, that was the end of last year. It wasn't as big a decline. But, and even if you're, I'll tell you another thing too, even if you're a raging bull, and even if you think the stock market's going to 5,000 by the end of the year, to new all-time highs, we are right for a pullback. No market moves on a straight line, and you can take advantage of it in both directions. And so it's like, why would you do yang? You can just, again, maybe this pullback only lasts, it doesn't fall as much as I think it will, but this kind of evidence is telling me, and again, like I said, when we get like something like the NDX, it's been such an important leadership. It's led up both directions. See, oops. Index. There we go. Look at that. Look at that. That is a pretty, won't need much more decline there to make that a compelling development. And so again, so that's what we're trying to accomplish here. Again, making things where we're teaching people about MACD charts, about another thing I talk about. One of the reasons why I became so cautious on the energy stocks after being so bullish for a year and a half was this thing called the Bollinger Bands chart. And this is something that talks about, again, we used in our analysis when things get to extremes. But this tells you when a stock gets more than 2 standard deviations above or below its 20-day moving average. Look at the XLE right now. It's starting to peak above that. Ooh, that's got me a little worried. Okay. So this group may be getting ready for a little pullback. But here is this is the weekly Bollinger Bands chart. So it was the 20-week moving average. Look how high I got. And I was like, that's too overbought. And I also looked at the RSI at the time. I said it's just getting too overbought. See here in June, it's getting overbought. So it worked out really, really well. So this is just, it's such an exciting time. I really thought that the things would be, I wouldn't think, but I was worried that things would calm down in August. But if it is, it is. And that's the thing is, there's nothing going on in the marketplace. I'm not going to suggest doing something. And there's been days people say, hey, the chat room's been very quiet today. It's like, yeah, not much to say. I'm not going to make things happen. I'm not going to say, this, look at this, if it's not there. Some people feel that they've always got to be saying something. Sometimes sitting on your hands is the right thing. As the old saying goes, so don't just do something, or don't just sit there, do something. But, sometimes it's don't just do something, sit there. And right. That's not the case right now. But when that happens, that's what we do. We don't force it, I guess is my point.
And Jay has a great question here on the chat, Jay. So basically asking what types of options are being traded in the chat room. So that would be the most basic type of trade, Jay, buying calls, buying puts, nothing complicated. If you are new to options, this is probably the best place to start if you're trying to get into trading, because you will be basically copying Matt's trades. That simple. You'll be doing what he's doing. That's it.
Yeah, and we don't do a lot of condo. I mean, there's some people in the chat room who do, but that's not what I see. I'm like, we want to keep it. My expertise is more on finding key turning points in individual stocks, groups, markets, etc. Not so, and so I want to keep it just buying puts, buying calls. Sometimes we'll do some straddles or some strangles. Now, sometimes you get to a key inflection point for a stock. And if it breaks above that resistance level, it's going to fly. If it fails, it's going to dump, and it's going to do one or the other. So we go in and buy a straddle or a strangle, and what that is, and a straddle is we buy, we buy both a put and a call in the same stock with the same expiration date and the same price, strike price. And you think, hey, I'm spending $1 on each of them. This thing's going to go $3. So yeah, I don't know which way it's going to go. I know it's going to go big one way or the other. I'll lose money on this one, but I'll make way more money on that one. So we'll do that every once in a while, but that's not the main focus of our strategy. The straddle is the same thing with different strike prices, but at key inflection points we'll do that. But other than that, we kind of stick to the basic puts and calls, and some
the volatility
and leverage ETFs too.
So basically, Matt is looking for volatility. I'll tell you, most people shy away, sit on the sidelines, buy and hold, and just lose money on the way down. But with Matt, it's different because you make money on the way up and on the way down. And keep in mind, there's always opportunities out there. I want to read out a couple of chats here from the YouTube side, Matt. So Tiffany, this is why I traded you at UVXY. I don't know if that's the Tiffany from the chat room, but there is a Tiffany that made like 4,000% shorting Target with puts, and then 2,000 with Ross. Again, the members are amazing. We cannot talk about this live room without talking about the people in it, right? Mervin Yu says, I joined Matt's Inner Circle a month ago. It's been great. Good stuff, folks. Well, I mean, thanks a lot for the shout out there, Matt. I'll tell you, Matt's a career guy. He's been doing this for 40 years. Like, what do you like, it's like, that is dedication. If I don't know what else is commitment, 40 years is more than what most people here have been alive. And so it's just good to have that experience.
I'm feeling old. I'm sorry, here's the thing, to type in a quick question from the CNBC guys when they asked me something about tonight's interview, but I'm sorry I got focused, but I just wanted to give
I mean, talking about CNBC, man, there's a lot, there's always a lot of stuff out there, right? There's always a lot of noise in the news networks, bring in all sorts of people there. And it's really hard when you're new to trading. You really don't have any direction. There's no instructor's manual. There's no beginner's manual, right? There's nothing like that. It's just open your account, put in life savings, blow it all away, right? But this is really where Benzinga comes in and your services here, Matt, because you're able to help new traders. And unfortunately, if you're new to trading options and you don't know what you're doing, you can get hurt. It's the truth. And that's why being part of a community and having an instructor is essential, in my opinion.
Absolutely, and it's because it can be very. I mean, there's a lot of risk involved. There's no question, but it's funny because so many people put leverage. It's like, at least in a way, if you do it smart, if you don't go overboard, if you start buying options on margin and stuff like that, that can get real dicey. But if you're just buying, it's like, okay, I have a certain amount of money. I'm going to give this a try, and I'm going to, I can play just a couple options here or there and get my feet wet and learn, and then I can expand it. That's kind of what I did and way back when. And but the thing is, if you're just using money, it's like okay, this is money I can lose. Okay, if I lose it all, I'm fine. But I'm not gonna try to do it all at once. I'm gonna play around with it because if the stock, when option expires, it expires worthless. If it expires, where a stock, unless they go out of business, it's still gonna be worth something. So you might lose. I got killed. I lost 40% in that stock, which should never happen. If it ever goes down more than 10% from your cost, you should get out of it. But that's for a stock. An option you get more. But but at least it's worth something. Where stocks, you do have to be careful, and that's why risk management is important. But we try to talk a lot about that in the chat room. And the point is that
really quick there about the risk management side. Every trade that you provide in the chat room, you let them know that, hey, it's a small, I'm building a position. Right. It's a small position. it's a little larger. So, and you always sometimes you hedge your trades as well, right? So
in fact, we did. Yeah, exactly. Right. When we suddenly, it's like, geez, the market's really getting hit here. I've got some, I've got some puts that have really made some nice money, but boy, anything can happen overnight. So I'll just go out and buy a few call options to hedge that. And so the next morning comes up, oh, the market's up. I make money there. I cut my losses there. I'm saying again, I haven't caught my losses. I've got a big gain. So suddenly my gain isn't as big, but I haven't lost as much of that gain because I made money in the calls. So we'll do some hedges there. And people can, like I said, you own an Apple computer and the stock gets really, really overbought at some point. Why not buy a few? Again, I don't want to sell Apple. First of all, I own it. It's I don't want to have a tax thing. Great. go out and buy a few put options that go out a couple of months. That doesn't have to be just the ones that expire on Friday or the ones that expire a week from Friday. They could be ones that expire 2 months from now, because I think it looks really vulnerable here. And then suddenly the stock goes down 10%, but on that small options position, you're up 80%. And it more than makes up for the thing. And then you take the proceeds and say, great, Apple's down 20%. I have this cash, I have this profit here. I'm going to take that money and buy cheap Apple. And suddenly now you've got a big position at a better price on your big long term in that big bucket, and it just goes higher on the long term. So it's
more importantly here, Matt, I guess a real value here that I see is just the transparency, right? The transparency overall, especially because whenever if new traders they don't even know who Jerome Powell is or what the Fed is or what it does, and if you're just looking at the TV screen and just going with the emotions of what they're saying, it's really hard for you to get a unbiased approach, because ultimately that's what you do. You help these traders really figure out the markets, what's happening, instead of listening to, let's say, people that just read a teleprompter. They're just reading a teleprompter, they're doing their job, but like at the end of the day, their job is not to make you a better trader. They're just there to report, and like in the chat room, you're actually there to help traders. So what I'm saying is that you're unbiased with breaking down the information, and that's really important for traders, especially if they're new.
And that's why, because I know that there's so many good professionals on Wall Street. I don't want to badmouth everybody, but that there are people that pay to be bullish, and their whole thing is to keep your money with us, keep your money invested. And for me, because we play from both sides, I can say, yeah, let's go in and buy this, let's go buy that, or let's go in and sell this, take some profits on this, or let's get short. When I say short, I don't ever short stocks. When I say short, what I do is go in and buy put options. Getting short could be is another thing, because you have technically loss could be infinity. I mean, when a stock goes from 20 to 0 and you own it, you lost $20. If you're shorted at 20 and it goes to 40, now it's to 0. But what if it goes to 50? Now you've got to give them more money, so you actually can lose more than the $20 you put in. So I never short stocks. Some people do, and institutions very sophisticated and they have these big margin accounts, and that's fine. And I'm not saying they're bad for doing it. I just think for individuals that's a much harder thing to do. And I don't deal with that. When I say I get short, I really mean I'm saying I'm buying some puts or maybe some inverse ETFs. That's another thing too. Is that it's going to be interesting how they're going to have single stock ETFs. And so you'll be able to buy without having to short an Apple computer. You can buy the inverse ETF, and you might be able, or if you like, I really like Apple, but I don't want to put it in a margin account because I want to be conservative. Well, you can put it in the leveraged ETF, so that you won't get a margin call. You can lose more. I mean, if the stock goes down 5%, and it's a 2 times leveraged ETF, you'll lose 10%, but you're not going to get a margin call. So it gives you much more room to maneuver, but you can take advantage in both directions. I'm sure you're going to hear a lot more about these stocks, these individual stock ETFs. And again, that's going to be another avenue for us to use that, again, was only used by institutions over the last, until recently for decades and decades and decades. And now we have the tools and we can do it in both directions. The whole idea is why let these hedge funds and big institutions be the only ones that can make money on the way down? Why can't we do it too? We can now. And let's use some strategies that will work in that process. And that's what we're doing right now.
Right, definitely. And so we have about maybe like 30 more minutes here, guys, with Matt. As you know, he's a very busy man. He's wanted by all these news places. But if you do join the chat room, you have him all day, Monday to Friday. Look, and Matt throws some jokes out there. It's not all just trading. There's laughs as well. People have a great time. Again, keep in mind that is the workplace of all these people. Like, that is the legitimate workplace where people are there making money, having a great time. You want it to be enjoyable, right? So I think that's really important, Matt, because you also help people that, like, for example, if somebody goes into the chat room maybe and they've had, they're very new to trading, right? Sometimes you can help them from making a very serious mistake. An account destruction, total account destruction could happen, right? So Juke says that he wants to join for the jokes. I like that.
Well, if you're a Yankees fan, you might not like some of my jokes because being up here in Boston, I like to take a shot at the Yankees every once in a while. But it's all in fun, and because I have so many friends and I grew up actually in suburban New York. I wasn't a Yankees fan because when I was really young, we lived in Massachusetts. Then I grew up in Connecticut, right outside of New York. So I was still already a Red Sox fan, but I grew up with Yankee fans, and I like the Yankees. But we joke about all sorts of things, and it's I mean, it's fun. It's a lot of fun. So it's yeah. Every once in a while, it's just you can't help it. You get somebody who's on there, and you look and it's like, oh my God, who is this person? And you can have a little fun, but not at their expense because it's we don't try to be mean to anybody, but at the same time, it's a tough business, and you need a little comic relief every once in a while, and it's a fun business. But if you can't have some fun, I mean, if you're constantly working and not having a little fun, it's no good. And we make fun of each other every once in a while, and again, it's all in fun. We have one person who's very, 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 very bullish. Most of the time, I should say it all the time. I mean, he may change, but so when the market goes down, we always did with him. But boy, he's been super right and done very, very well this summer. So he's laughing all the way to the bank.
And just, I don't know if well, I mean, I've been following Matt here for a couple of years, but I'll tell you, man, like whenever we were at the top, I remember we were doing that session. You were talking about Nadella, right, from Microsoft. And right from there, man, that was like the moment, right, where I guess everything turned around. But the cool thing is that you were letting all of your members know what you were expecting so that they could go light on the stocks and heavy on the cash.
Exactly.
So that's really what and look, this is my experience. This is what I have seen Matt consistently do all the time. And keep in mind, this is the only live trading room for Matt. So you're getting all the juice here. You're getting all the juice.
Yeah, and it's the thing, it's like what Rodrigo was referring to was back at Thanksgiving, or the week of Thanksgiving last year, just before I think Monday or Tuesday of Thanksgiving week here in the U.S. And Mr. Nadella, the CEO of Microsoft, announced he had sold half his holdings in the stock. I was like, what? Wait, what's going on here? And a couple of days later, the stock went down. Then a couple of days later, I think about the next week, it went back up, retested those highs, and announced he'd sold more. He had sold a total of 2/3 of his holdings. So 2/3, and I immediately said, that's the top. This is the top in the tech stocks. It's the top of the market. Now, there were other reasons I was worried about it because the Fed was talking about becoming more hawkish and et cetera, and that's what they did. But this is what it did. He sold it here and made the next sale here. 2/3, $374 million. Nobody sells that much stock all at once unless he thinks the stock's going to go down and stay down for a while. Doesn't mean you think it's going to go down 80%. Doesn't think it's going to, may only go down for 6 months, but it'll stay down. It's not, he wouldn't make that sale unless he thinks it's not getting back to 340 for a couple of years. I'm telling you, and I was like, well, what are you talking about? Well,
right.
Again, a guy wants to sell $25 million so he can buy a house in Hawaii or a house in town on the Riviera or someplace in Europe. That's fine. But you don't sell that much unless you're really worried. And I've given the example. I'm sorry for people who've been on here before, but the examples are so good. Whenever the insiders sell, you've got to stand up and take notice. It happened in 1999. Goldman Sachs, they sold. The insiders sold there by taking their company public after being private for 100 years. 1999, what happened the next year? The tech bubble burst. They saw it coming. Blackstone, one of the most important and successful private equity firms, private for 25 years. In the summer of 2007, the partners sold their stock to the public in an IPO. 3 months later, the stock market topped out and the great financial crisis started. Glencore, same thing, big commodities firm. The spring of 2011, just before a 9-year bear market of commodities took place, they sold out. And these, again, each cases, they kept some of their shares, just like Nadella kept some of the shares. But when they see it, it's just not because there's, believe me, if 2 weeks later they announced there was accounting fraud, he would have gone to jail. He is a good CEO. He's a great CEO. He has a great company, but the stock wasn't a great stock back then. And I think it's gonna stay down for a while. But these are the types of things from my experience that that
Right.
has helped investors.
And you also have Coinbase there in the mix. But listen, Matt, we have to give a big shout out whenever we have to do this. Big shout out because guess what, man? We got a new Tiffany in the chat room. Welcome to the family, Tiff. Let's go.
Oh, great to have you. Congratulations and thank you. I think you'll find it especially in the very near future. Things are going to be no matter what happens on Friday. We're going to see some movement, and we're going to want to be able to react to it very, very quickly.
Right. And Matt, really quick, you also break down because somebody had a question about this earlier before. They really don't really know much about the Fed or this sort of stuff, and talk. And I was trying to answer him really quickly, but I think it would be better to kind of just talk about it really quick. You've been doing this for 40 years. You have been dealing with the Fed for 40 years in the markets. So for some people that maybe don't know what the Fed is, you always explain what's happening, how this works, how this impacts the markets. I think that is a lesson that you will not find anywhere else out there, where somebody can give you real time actual breakdown and education on the Fed, bonds, yields, currencies, commodities, everything. Global strategist Matt Maley. I mean, I think there's a lot there. So just make sure you actually use the skill sets here from Matt appropriately, because there's a lot of knowledge there. Definitely.
Yeah, and again, it's just, and the thing is, there's so many things in the stock market that seem to make sense but are just dead wrong. And I just say, here's Microsoft again, right? It broke above that. It was that resistance level. It looks like, and again, it was actually more of a trend channel. Let me do it again. Do it again here, bang, and bang. See, it's been in this downward sloping trend channel, popped above it. If it breaks back down into it, that's going to be quite negative, and it's going to tell us that Mr. Nadella was smart. Down here, he had saved $100 million. Now he's only saved about $70 million. Either way.
Really quick here, Matt. Really quick. Sorry, man. Michael Best, welcome to the family, brother. Let's go.
Great, welcome aboard, and again, we're going to be interested to see how things happen. What happened today in the market? Let's just talk about that real quickly, because I know we're going to get into some. I want to give you guys an opportunity to give Rodrigo some. Oh, by the way, I just want to say one thing that happened this week. We had a great week great day on Friday. Another great day yesterday. Today was the market kind of fluctuated. We did make some more trades, kind of betting to the downside, although we do have some protection as a hedge to the upside of the marketplace. But one guy said he made 40% on his whole portfolio on Monday. I'm just telling you, I didn't make that much. I had a very good day. But this guy obviously made some big bets. But these are again, this is not, whether it's true or not, I don't know, but he said it. And I think Rodrigo can show you in the chat room that it's there. I mean, I'm not making this stuff up. But the point is that, just the leading into what happened into this market. Today, what we've seen in the last 2 months, every time the market's gone down for a day or two or three, like it has recently, that was enough. Boom, then it bounced right back. Today, no, it didn't keep going down, but it didn't bounce. I think today had to be disappointing for the bulls. It's like, wait a minute here. We should have bounced today. We should have been much stronger. Now, again, so tomorrow could be a tough day. We'll have to see. Could be wrong. Maybe tomorrow the big bounce comes. So I don't want to get too ahead of ourselves, but I did add to some bearish trades at the very end of the day today, and we'll see how those play out tomorrow. But I think we could be on the cusp of a rather deep decline, which I'd love to take advantage of, because when it bottoms, it's going to present great opportunities. And if we've made money on the way down, we're going to be able to take advantage of it even more. So that's just to keep again, I just want to, maybe I can just show it here. Oops. Yes. PX. I just want to give you what I'm telling you about on the near term. Let me we all know about the 200-day moving average. So I'll just get rid of the moving averages. I'll get rid of the volume. Okay, but see how since June, okay, we had a down day, a couple down days, and then bounced right back. Okay, this one, okay, but that was just beginning. But since then, the down, we had this down thing, you got a spike, and then straight back up. This one was only the further we got into it. You see how these things only down for 2 days and spike right back up, spike right back up, spike right back up. This one's not spiking right back up. That, it could, maybe it ends up being one of these, and then it finally goes back up. So I don't want to get too ahead of ourselves, but when you get, again, this is down because it's not just 2 days. It's really 1, 2, 3, 4, 5, 6. Now we're at 6, 7 days, okay? And that hasn't happened here. Here's only 3 days and it finally went back up. 2 days, finally back up. 2 days, right back up. This one went sideways. It didn't go down, went sideways, okay? That kind of told me, ooh, it's starting to lose a little momentum, but it did bounce one more time. Now it's coming back down. And it's not, it needs to bounce back right away. If it doesn't, I think we're going to get a pretty decent decline. And again, going back to those MACD charts and these things that I was talking about, momentum definitely seems to have shifted, in my humble opinion. And the Fed's job is not. Talk about the Fed. Fed's job is not to keep us from having a recession. They know recessions are normal. They know they're healthy. They don't want it to happen. It's amazing to me how some of these people some of them have been doing it a long, long time, in some cases longer than me. And they said that, the Fed won't do it because that'll cause a recession. I say, the Fed has to do it or the recession will be worse. They have to do what they're doing right now. And they are smart enough to know they cannot always avoid a recession. I think we're already in a recession, whether we have it or not. Maybe I'll be wrong. I'm pretty darn sure that we are. But if I'm wrong, it's not because the Fed will turn on a dime and that's the other thing. In 2018, everything. So the Fed pivoted when the stock market went down. That's wrong. That's just wrong. Okay. The Fed in December of 2018, the Fed raised rates again. The stock market was down 14%, I think 13 or 14%. And they tightened again and the market went down even harder. It was down 19% and they pivoted and everybody said, oh, they got scared of the stock market. It had nothing to do with it. What happened is that the bond market started freezing up. So far, these problems we've had in the bond market have not shown any serious signs of freezing up. So they're like, hey, I hate to say it, they care a lot more about the bond market and the financial system than they do about the stock market. A bear market is normal, it's healthy. They usually last a lot more than 6 months. We've recovered from them many, many times in the past. We'll recover from this one as well. They know that. They know, and so for people to say, the Fed will get scared, they don't want a recession. That's baloney. They'll let the stock market go down as long as it doesn't impact a serious way the financial system. When the fixed income markets freeze up, that's when you have with the repo market and things like that. That's when you have the big issues. Not when the stock market goes down. That's right. Why these people think that, because they've made a lot of money believing that. And because the Fed did have our back, but the Fed had our back for all those years because the financial system was so darn fragile. They had to keep coming back with QE programs. Everybody talks about how good a shape our banks are in. That's true. I mean, unless I'm wrong, they can let things go down a little bit more. They couldn't let them go down in 2012 and 2013 when QE 2 and QE 3 kept having to come back. And of course, they had to come back with it in 2020 because of the pandemic. So that's just kind of the situation we're looking at now.
Matt, really quick there, Mervyn, I know you were mentioning that somebody made like a 40% on their portfolio. Well, I think Mervyn Yu, which is a member as well from the chat room, says that he doubled his portfolio, his account since last month. So there's definitely something magical happening there in the chat room, Matt. We can see the motivation and the passion that you have for the markets. There's no reason why you would do this for 40 years if you wouldn't have that. And Mr. Silver is asking, is this live? Maybe, could be, it's a possibility. Eric Scott, yes, I believe it's live. Right, so it is live, ladies and gents. We are live here with Matt Maley. So he is real. He is not a myth. Well, he's a myth, but he's a legend too.
A legend in my own mind. There we go.
Yeah. So really quick here, folks. So look, we have about probably 15 minutes here with Matt. We've been here, no joke, for about 2 hours. All right. 2 hours out of pocket here, just talking with you guys about the markets on a beautiful Tuesday. So Matt, there's 15 minutes left on the clock. Would you like to get trades like tickers from the chat room? And if there's this trade set up, you kind of follow up with it in the chat room.
That. While you guys are giving Rodrigo some tickers, I'll go through a couple. I've already shown you a bunch of them, but let's look at Tesla. Although it's been kind of quiet and out of the news, I should say quiet. It's been out of the news because of some of these other things that have been going on. But I'll look at Tesla and we'll take a look at that. And if you have other tickers that you're interested in, and good, excuse me, and they don't, like I said, and I'll tell you, there are sometimes somebody asks, what do you think of this stock? And I'll be like, I don't know the stock. I mean, and I'll say, this is what the chart looks like. In some cases, they say the company's only a year old, so the chart really doesn't tell you anything. If I don't have a good reason, I'm just gonna say, sorry, I just don't know. So I'm not going to lie to you if I don't know what I don't want to mislead anybody the wrong way. So just so you know that. But here on Tesla, here we see how the stock has been. Well, let's just get rid of that so it's out of the way. Move these couple of these things. It's not wildly overbought, but you can see how it's having a trouble breaking above its 200-day moving average. It's getting above it a couple of times, but it can't seem to get it. Now, that's not a major problem yet. In fact, you could call this what we call a ascending triangle pattern. Let's blow it up a little bit. Okay. So what we're going to be looking at over the next, you can see it's right in that 20-day moving average, sorry, 200-day, but I'm going to get rid of the 200-day. I'm just going to, so you can look at this pattern here. It's a short-term one. I mean, it's only had 2 points, but 2 touch points. Okay. See that? And then we'll get another yellow line in there. And we'll do this. And you can see how that flat line, and that's what's called an ascending triangle pattern. The deeper you get into a triangle pattern, the less of a move it has after it breaks it. People assume that, oh, it's getting tighter and tighter and tighter. It's really getting squeezed. It's really going to burst out. It's actually not the case. The tighter it gets into it, it actually has a less of a move. But now we're at the close to the bottom end of that range, about bounce today. So if we break below it, that's going to be a problem. Definitely going to be a problem. If it breaks above it, though, this thing's going to shoot to 1100 fast. Okay, and again, you can also see that top is also just pretty much in line with the high we saw back in early April, right? So it'll be a key level if it breaks above here on the upside. Now it's closer to the downside, so we'll be careful. So that's what I'm looking at right now.
Right.
The level to look at for tomorrow will be 863. And again, it has to be more. If it breaks 863 by 50 cents, that's not a big deal. You want to get 2 or 3% below that number. So right now it's in no man's land. It's coming off an overbought condition, so it could break down. God only knows what happens with the Tesla and with the Twitter and stuff. But
that's what I was going to ask you, man. So what do you think about and also maybe here's the thing, this guy, Elon, all respect to him. He's a great businessman. You got to admire him. But what if he just wanted to sell all those Tesla stocks, not because of the Twitter thing, but just because he thinks the market is just going to tank even lower? Well, I mean, it's just, I don't know. What do you think?
Well, I mean, it's funny because he's another guy who sold. Remember how he sold at the beginning of the year, and right, it was near the top. It wasn't the exact top, and he just said, "Well, I had to sell it by August." I go, "Okay, fine, but August is a long time from now. You don't have to sell it now. You can sell it." And he did, and he's raised several $1 billion. Then he raised more. That was long before any of this Twitter stuff started. He sold. People forget, but he did have. But he did have the options expired in August, so he did have to sell them, or they would expire worthless. Who in the world would let options that are worth billions of dollars expire worthless? So he had to sell. He had to sell the stock. The exercise the shares to sell the stock. That's fine. But again, it was another signal that he didn't wait until later in the year. He did it at that point. It wasn't as compelling as the Microsoft bump. But going back to your question, Rodrigo, I think that it's when insiders sell like that, maybe he'll use an excuse to sell even more stock to liquefy himself. But he's got plenty of money, and if he's got plenty of cash, I should say. This whole Twitter thing is stupid, but why he did this? Maybe he's got his in a ringer. But he is a believer in the long term. It's just like Bill Gates. Remember I told you how when companies go public, if they've been private for a long time, that's a negative sign. That's only when the insiders sell. That doesn't always happen. Sometimes they're just raising new money. It's the company selling, and they're raising new money because they want to expand their. It's like, hey, we're not cashing out. It's our investors, or our seed money wants to get out, or we're just raising money so we can build a new factory or something like that. And that's what happened with Bill Gates. The IPO of Microsoft. They said, hey, that wasn't a selling point. No, it wasn't a selling point. And Bill Gates didn't sell. He sold $1 million of stock on that IPO. That's it. Just, I mean, it's a lot of money to you and me, but he could, I mean, he had tens of millions, hundreds of millions of dollars of stock at the time. And he said, I would be buying. And the joke was around that the only reason why he sold is so he could move out of his mother's garage. And so take that caveat that about when it's an IPO, that doesn't mean it's but when the insiders sell. So if he sells a lot more, that's going to be a big concern. Will he? I just think he's in the early stages of what he thinks is something that's going to change the world in so many different ways. So I don't think he will. But he's got to get this Twitter thing behind him one way or the other. And right now, he just seems like he's doing it to get at a much better price. Boy, he's just got himself in a mess here, which is very surprising for a smart guy. But this will, I think, keep clouds, keep a headwind in front of the stock that it doesn't need to have. So again, it doesn't mean the stock's going to go down a lot, but I'm more worried on a technical basis and because of this, but I'm more worried about it because of this whole Twitter situation. It's something he did not need to get himself involved in, and he did. And all the great ones have made big mistakes, not necessarily fatal mistakes, but big mistakes, and this looks like this is his. So.
Right. Okay. So good stuff there. And we have from our good friend here, Mike Axon, asking for, this is the Coca-Cola guy. He's asking for NIO.
NIO?
Go ahead and look at that. Yeah. NIO. Yes.
Oops. Now, my fail-safe is the RSI chart, but you can put up anything. So a lot of people just use a GP chart. It's always good to get a look at it. But so just because I always look at the RSI doesn't necessarily mean that's what everybody else should do. But the stock, it's this rally has run out of gas a while ago, and you see how it couldn't. Let me get let's get rid of that line for a second. The moving averages don't mean a whole lot. The 200 days still declining. The 50s starting to roll over again. Those aren't good. But let's get rid of those moving averages. Just look at this situation. How the stock just couldn't. Whoops. Oh, no wonder I didn't get this. Whoops. Sorry. Okay, I just had to get rid of that line. And let's go back to, I'll go use yellow. Bang. Now look at this. See how it got right to that resistance level. It's like, oh, maybe it's making a double low. I mean, it's slightly lower low, but it's basically a double bottom. Those are great. Nothing worse than a double top. Let's say nothing worse, but few things that are worse than a double top, few things that are better than a double bottom. If they could just make a higher high to confirm the double bottom, that would have been great. Well, it didn't happen. And sure enough, it's just been dragging. Looked like it tried to get another, that's rolled back over to a lower low. This is just, this is one that's looks like it wants to head lower. I mean, it's starting to get oversold, so I'm not saying it's going to go back and retest its lows in May. But on the technical side of things, I just want to look at one thing on the see, because I don't think they're, gosh darn it. Whoops. That thing froze up there. Hold on a second. It only takes a second to unfreeze it. Yeah, it's not going to make any moves. I just, all these automobile companies are having. I mean, I have a good friend of mine. I don't want to start talking, but the Rivian, and it's like, they're going to be some winners, but a lot of them are going to lose. And I'm just worried that NIO's going to have a tough time. Just like the cryptocurrencies, and just like it was in the internet stocks, the ones that survived did extremely well. This one it's a good company. I don't want to overstate it, but just the stock is not. It looks like it's rolling. It's making a lower low here. Looks like it wants to go lower. It's one that if you like it, I think you'll be able to buy it at a cheaper level, especially because it failed to break out and make a higher high, and it's now again making, if anything, making another lower low.
Right. Good stuff there. Quick note for all those that have signed up live and those that do want to sign up live, you will get 2 extra bonus items courtesy of Hot Rod here. So extra surprise there for those that do join. So Mike, there you go, man. That is your setup there. And keep in mind, Matt has already, a watch list and things like that. There's like an ongoing trading discussion in the chat room already. So there's already trades there for you guys that are just popping in there. Let's see, we have a couple of people asking about Intel. I guess this is expand a little bit there on the chips situation.
Well, I mean, I am going to be, and it's what they want me to talk about on CNBC. It's going to CNBC Asia later this evening. Intel, boy, it's funny. You get these different opinions on it, and the stock probably will move lower because I think the rest of the market will. But it's already down a lot. Number one, number two. Again, I'm going to go back. The reason why I look at these, I like to see whoops. I hit this one thing because it gives me, PE of 12. I mean, forward PE of 15. Nice dividend yield, pays you to wait 4%, over 4% dividend yield. But that's not what I'm not, I think it's stock will go a little bit lower. But my story here is that I think everybody should be buying this stock a little bit each month and say, okay, I want to put X amount of dollars, let's say $1,200, okay? I want to put $1,200 into this stock. Okay, what I would suggest is put $100 in it once a month, every month for the next 12 months. And the reason for that is I don't know when this thing's going to hit bottom because I'm still worried about this bear market. And, trying to pick the exact bottom is kind of a fool's game. It is, there are people telling me, this is the next IBM. They're just not going to be able to, innovate the way that they used to, and they'll still survive and they'll do fine. But my feeling is that there's companies that are too big to fail. This is not Intel, and I'm not worried about them failing. What I'm saying is that this is different. This is too important not to succeed. And we talk about this in the chat room a lot. It's like with this situation going on with China and Taiwan, 24% or 25% of the chips that we get in the US are made in Taiwan. What if China takes over Taiwan? What is that going to do? We are screwed. For all practical purposes, we do not make chips in the US. Intel used to, they got out of that business. They're the only company big enough to get back into the business. They have to succeed in this new chip manufacturing business because they don't, it's an issue of national security. We can't, we do without chips, or if we get bad chips, or whatever happens to be, this has to succeed. And the government's going to make sure it succeeds. So they have how many billions of dollars of contracts that they put out? They're going to say, make sure you're buying Intel's chips. And they're going to buy Intel's chips. And they're going to go to Raytheon and missile systems and say, where you're buying your chips? You're buying your chips from Intel. That's where you're buying your chips. And this company is too important not to succeed. It doesn't mean it's the best semiconductor stock out there or semiconductor company out there. And there will be stocks from the bottom that will do better. But this is one you want to put some money into. I'm not saying back up the truck, put 100% of your money in Intel, not remotely. But this is one that when you buy it, it has to succeed. So when not only do they have to succeed, but the next bull market, when the next bull market comes along, this stock is going to do really well because it's already got, look how badly it's underperformed. Let's just pull it up here real quick. GP. Look how badly it's underperformed for years. Now they also have a new CEO who's done great job at other companies. It's hard to move it. But look at this stock. It did nothing. Of course, it sold off like everything else. Did nothing on the stock. Let's see. I'm gonna do it here. Equity GPM. Okay. It's going to compare it to the S&P 500. Okay, and I'm just going to make this so you can see the color a little bit better. I'm going to make it yellow. Oops. And then I'm going to go back. And I'm going to go back. 2001. Okay, look how badly Intel has underperformed. All right, here. It was doing fine, but let's go to 2018. It's ridiculous. So it's like, well, maybe I shouldn't buy this stock because it's been underperforming so badly. It's like, yeah, but now the government's going to make sure they succeed. Okay, how much more is this stock going to go up than a lot of other stocks? I just think it's going to go a lot higher. So I like Intel on a long-term basis. I'm not saying back up the truck. I'm not saying it's the number one stock you ought to buy, but I think it's something everybody should own because I think 5 years from now and 10 years from now, you're going to say, I can't believe I bought Intel when everybody thought they were down and out. And they were down and I would say down and out, but they were good. They were headed towards mediocrity. They got a new CEO, and now they have a geopolitical reason where they have to succeed. So long-winded answer, I apologize, but that's why I like Intel on a longer-term basis, but I want to ease my way into the stock gradually.
Right. So, all right, folks, we are going to, we're going to do one more ticker. After that, we do have several members that have signed up here through the session. So I'm going to do a walkthrough with them of the chat room. It's going to be like 10 minutes around there once we're done. So make sure that if you did sign up and everything, or if you have questions, stay till the end. But Matt, last one here, this one's for me. HUSA, it's an energy company. I've traded it before, but it's kind of trading around with energy. It's like a Houston Energy, something like that.
Well, as you know, as I mentioned earlier, I am bullish on energy, and boy, the stock has had nice. So you can see how it's had these, meme stock moves. Okay, that's fine. But look at these. I mean, the one thing I love about this, a couple of things you're going to know about this stock. Number one, just get rid of a couple of things. Getting a little overbought. Looks like it's got more to go. And since I'm bullish on energy and crude oil, but see how this stock, look at this 200-day moving average. It couldn't break above it, couldn't break above it, couldn't break above it, couldn't break above it, finally broke above it, and it just took off. Okay, a little crazy. A little crazy on that one, obviously. Came back down, so that is one of the key rules. When something has been a very important resistance level and is finally broken, that level becomes the old resistance becomes new support, and vice versa. When a key old support level becomes new resistance. In this case, you see how it got down to its 200-day moving average, bounced. 200-day moving average, bounced strongly. 200-day moving average, held it, didn't break above it, but then finally it's breaking now. So again, it's getting a little overbought. You're going to be a little careful here. It looks like it wants to shoot above $6. But as you're trading this one through time, you want to know that it gets down to that 200-day moving average. That's a great entry point for the stock on a swing trade. And maybe even for options trades. But as you can tell, sometimes it rides that 200-day for a while. So it's probably a better swing trade than an options trade. But when you're buying it at $3.60, that swing trade can double your money rather quickly. So that's the one right there. I'll be a little careful near term, but it looks like it's got more upside, and I'm bullish on the energy stocks too. But the next year, every time it gets down to the 200-day, buy it.
All right, and we're gonna do one more here, just so that you guys see that Matt and me, we're ride or die with you guys. All right, we got Toph. I don't know what the whole name is, but Tofa wants Disney, DIS.
So funny how. Oops, sorry. Okay. Walt Disney. Okay. Let's see how overbought this thing got. Okay, so it's coming down. It's disappointing. People say, "Oh, it had a nice run." Well, okay. Let's go back a little bit further. The stock has been underperforming for a while now, but let's just look at this. I want to be. You see how it got near its 200-day moving average? That doesn't matter. It just got very, very overbought on its RSI chart. But look at this. Let me get rid of these moving averages so the chart isn't so darn busy. And I'll do this, and I'll do this. Boom. There we go. See how it's gotten right up to that trend line? That's okay. Oh gosh, it failed at the trend line. Not really. It got above it, and it was overbought. So what is it doing now? Right now, it is working off that overbought, very, very overbought condition. That's okay. So now we want to look at this and say, maybe it comes down a little bit more, and if the overall market comes down. But if this thing goes up and makes a higher high above this 126-ish level, boy, this thing is going to skyrocket to the moon. So this is just normal and healthy, working off the overbought condition. That rally could turn out soon. I think it's going to take a while because it's still it's important market to the stock. I'm sorry, important stock to the stock market. Since I'm bearish, I think it could fall a little bit further. But this is going to be one in the next bull market that is going to do really, really well. And it may do it much sooner than you're thinking, because if it gets back above that trend line, which is only down at the 118 or so. Okay, that's good. That'll be the first thing. So that's where you start buying it when it gets above that trend line, and then it makes a higher high above 126, you add to it and off it goes. Don't be afraid. Oh, I missed it. I should have bought it all at 118. No, forget it. People add, I mean, there's a whole nother rule on that, but we'll get to for that first when you're in the chat room. But by adding to winners is a great thing to do, especially when it's coming off a long period of underperformance. So this one's going to be a good one over the long term.
Right. I mean, number one, we've given a lot of shout outs here, but ultimately, you know, we have to give we have to give the shout out there, you know, to Matt Maley, right? So big shout out there, Matt Maley, for always hooking everybody up here. Let's go.
Thanks so much, Rodrigo. Thanks, everybody. Good luck with everything. It's not going to be a boring end of summer, and it's not going to be a boring fall. So good luck with everything. For those who joined, welcome. Can't wait to work with you tomorrow and in the days and weeks ahead. And for those of you who are considering it, I hope you'll consider it, because I really think this is going to be an exciting time where you can, you know, we all want to have that big bucket of long term, but if you have the time and inclination to try to enhance those returns, it can really work out really well, and especially because we have the tools to do it now. So, and when you're working with a good group that we're working with, it really, you know, the whole idea is, of course, is for the price of subscription to pay for itself rather quickly, and that has for a lot of people, and I hope you'll consider it. But either way, good luck with everything. Thanks, Rodrigo. We'll talk to you in the chat room, and have a great night, and go Red Sox, even though they're in last place.
All right, man, let's go. Let's go, Red Sox Nation. All right, with Matt Maley, Chief Market Strategist. Shout out there. Let's go. I'll see you there in the chat room, brother. And Charles Flower, make sure to call me. I think I saw the transaction there. Send me an email. I'm going to give you guys a quick walkthrough for all you guys that did join here. Mega, good to see you there. I hope I can see you in the chat room. It really gets, you know, it's a great time. Matt, you haven't seen the funny side of Matt yet. Okay. Juke, if you're trading those leveraged ETFs, then you're going to love trading with Matt, because that's his gravy, you know? So, all right, really quick, folks, I'm showing you the chat room. This is where all the action goes down. We do have a live session on Tuesdays. You will get an email about it. So it's a separate link. And Igor asking if it's live. Yes, right now we are live. And also the session that happens on Tuesdays, that is also live as well, Igor. All right. And so this blue chat room on the left side, I'm just going to zoom here really quick so that you can see there's two channels. One of them is called Inner Circle Chat. That's where everybody is commenting, talking, all the members, including Matt. The other chat room, the other channel is called Matt's Important Messages. That's where only Matt can post. And I'm going to show you really quick, more or less how this looks like, how it looks like. Okay. So you can see here, he was adding to the puts there recently that he sold for a nice gain. But basically, this is really the format. It's very simple, easy to follow. There's no way you get confused with this. No way. It's very simple. As an example here, he's going to add to the TQQQ August 26, $35 puts. You're getting all of the information that you need to set up the trade. This is as simple as buying a stock, right? The same concept. You're buying a call or you're buying a put. And then to close it, you sell it. It's that simple. You're not doing anything complicated on this. And it's very easy to follow, right? Also, you do have timestamps. I think this is very helpful for everybody, because you do know when the trade started, when it initiated, and if Matt was able to add more to these positions. Mega, send me a quick email, please, about that. You know, we can get a little bit deeper into the details on that. We are discussing here Matt Maley's live trading room. Okay, this guy's been doing it for 40 years. I don't know anybody that's been doing it that much that has a live trading room that's been really good at it. The portfolio itself, since Matt started, is about 300 on the upside, 300% on the upside. And he's not going all in. He's using small positions. And basically that is from the beginning of the chat room. So these are not crazy, you know, all in trades that we're doing. We're doing them with small percentages of the account, responsibly trading. Okay. All right, folks, I'm going to leave the link here really quick, but just for you to know, for those that did sign up here, remember, all right, remember, you're going to get an email with a form, and you have to put the address that you want us to send the laptop to. So that the laptop is going to be sent to you after the money back guarantee. and therefore the laptop is yours. You can donate it, you can give it to your children, grandkids, a person in need, whatever you want to do with it. It's yours to keep. It's a giveaway we're doing, all right, just till midnight. So if you do want to join, try it out. That's also a good thing to do. Keep in mind, this week coming up is going to be very, very volatile. So folks, if there's no make sure you ask your questions right now if you want to. I think it's better because we can do it live. This is not a recording. We are live here. So ask your questions here, and we could all, kind of get this through here. So Tim asking, what's the money back guarantee? 7 days, my brother. 7 days. You can try it, do everything you want, all in, all day, every day, Monday to Friday, 9 to 5. Okay. Monday to Friday, 9 to 5. D Makina, okay. D messaged me earlier. I just want to give a big shout out here, and I want to make sure I don't miss anybody else here as well. All right. Because we have a very, very special new member here, and we have to give a big shout out there. All right, D McKee, welcome to the family. Let's go. All right, happy to see that, D, that everything went through there. And folks, Tiffany, what platform should I use for trading? So that's a great discussion in the chat room. It happens a lot. Everybody's always, talking there about different things. We have an international community, people from all sorts of parts of the world, including Europe, Japan. I talked to a guy from Ukraine today, and he told me a whole bunch of stuff, what's going on there. So it's people from Finland, from Canada, from everywhere, all parts, a bunch of people in the US spread out, Hawaii. So it's really interesting to see all these different peoples from different walks of life, different experiences in their craft, and everybody gets together, right, to help each other out, trade, learn, all that sort of stuff. So D, I will see you there in the chat room. I know that a lot of you folks here are trying to get into the chat room, so I'm going to put the link here again. If you get some sort of error on the checkout, just refresh it, send me an email. This will pretty much expire at midnight. Yes, it's Juke, it's pretty much, it's a Chromebook. We send it out to you. And all right, I think we covered all the questions here, folks, but let's kind of get here to the chat room before we kind of wrap this up here, okay? And if you do have questions, put them there and we can go over them. So the other thing, this does have sound alerts, very important right here. These bells, you can see they turn yellow right there. That means the sound alerts are on. And if you take them off, the sound alerts go off, right? And everybody that does join, okay, but you do have to join while we're live, at least before midnight, all right? You will get additional trade alerts, okay, that are on top of the chat room. But you can it has to be, before midnight, because after midnight, the coupon changes, okay? The price at the renewal next year, because it's annual, will be the same. It will not change, all right? We don't do the whole Comcast sneaky move, the whole Sprint move, where it's like introductory price and then next year, they get you from where. So it's going to be the same price every year. It's never going to change. And the stuff I'm giving you for free, you're going to keep it there for free for as long as you have the chat room, okay? Elena asking, is this offer only for Matt's alerts? No, well, it's the live room is separate. So the live room has its own alerts, his own things, These alerts that I'm going to add for people that sign up live, or at least till midnight, these are separate alerts. They're not free, they cost money, but I'm hooking you guys up. You guys know I'm the king of deals, so I bring you the best of the stuff here. So everybody that does join will get that included. You'll see it there on the post checkout page. But please make sure that for those that signed up, you fill out that form with the address you want us to send the laptop to, because we get people from 3 months out. They got a subscription 3 months ago and they never filled out the form, so we don't know where to send the laptop to. So just make sure that you get the form, that you fill it out. If you don't get it, send me an email. We'll get that sorted out, right? We do want to get that laptop out to you. So, all right. Yeah, Comcast is the worst. I know. All right, so I think that covers everything. I think we went over everything in the chat room. You guys are going to get a whole bunch of bonus stuff, a free laptop, Matt Maley, Monday to Friday, 9 to 5, and the Tuesday sessions, 11:30 till 12:30 Eastern time. So I think that covers it. I'm going to leave the contact there. If anybody does have questions, again, put them up right now. It's the moment right now before we wrap this thing up. Al, it does not, but if you do sign up tonight, I'm going to hook you up. Okay. You have to sign up before midnight. Before midnight. The earlier the better, but before midnight for sure. Juke, which one do you mean? Hold up 1 second. All right, Juke, I sent you a message here on the Zoom thing. Okay, so that's your answer for what you're trying to ask there. Al, again, make sure to if sign up before midnight as well. If you do want me to hook you up there, I think this covers everything, folks. Everybody, I do want to thank you for being here, for showing up and being here with Matt Maley, going over his analysis. I know that a lot of you guys are members, already know Matt, and you just, you want to learn more from Matt. If you do, make sure that you're going to the Tuesday sessions. If you're missing that, it's just such a, what a waste, because there's a lot of great information there, a lot of great discussions. Pop into the sessions on Tuesdays, and those can go for an hour. They go for an hour, sometimes even longer. Okay. Elena asking, I'm signed up for the options. Well, yeah, so this is separate, Elena, but again, just if anybody does have questions, I'm going to put my email there so that your question doesn't, die in the chat, so that you can follow up and stuff, Lana, okay, so Lana just joined today, and I think I talked to Lana today, so good to see you here again. I love seeing that energy, right? You really have to show that sort of commitment when you want things to work out, right? You can't just really pray for things to work out and be a lazy person. You know what I mean? You always have to put in your part of things. And I think, Lana, she joined here recently. So when I see members do that sort of stuff, it's really, I can kind of see, I'm not a teacher or anything by far, I'm just saying, I see certain people, that are always in action. They're always moving, always trying to get information, trying to learn as much as they can. That's the attitude that you need to have. That's the attitude. So Lana, big shout out to you. And Tuesdays. Okay, so the session is on Tuesdays. That's AM. That's AM. So Tuesdays, 11:30 a.m. all the way till 12:30. And this is not at midnight. It's not at midnight. No, it's Eastern, but like in the morning. So 11:30 a.m. Eastern all the way till 12:30 noon. Okay, so that's the time for the session. And the trade alerts, the additional trade alerts that I gave you guys, they're not going to be in the chat room. They're going to be sent to you by email. Okay, those are going to be sent to you by email. But if you're watching this video and it's been like 2 weeks since we did it, you probably won't get the deal, very likely. But if you're watching this right now and you're watching this live, you will get it. You will get that bonus. All right. So that covers it, folks. Everybody have a great day. I'm going to leave the contact and the link in the chat if you want to reach out, or if you do want to give this a shot for the money back guarantee period. Everybody have a great day. It's been good being here with you, with Matt Maley, chopping it down. And we'll see you guys in the chat room tomorrow. So big shout out to all you guys. Mike, I'll see you there in the chat. Hopefully, let's go. All right, guys. Get this air horn. All right. See you folks in the chat room tomorrow.